Good morning and welcome to Stock Market Today for Friday, July 12th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com /today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities were mixed in Thursday's trading. Dow and S&P went out at all-time highs. NASDAQ and small caps underperformed. At the sector level, REITs and comm services were your underperformers. Industrials, financials, and materials outperformed. Treasuries were weaker with the curve steepening, which aided the financial sector. We had a big backup in yields yesterday. Dollar was little changed on the euro and yen crosses. Gold finished down 40 basis points. WTI crude settled up 40 basis points. As we get to the desk this morning, futures are up 20 basis points to start the final day of the week. Asian markets were mixed overnight with Japan moving higher. European markets are mostly higher here in the early going today. Treasuries are weaker across the curve again after that big backup in yields yesterday. The dollar is weaker versus both the yen and euro. Gold up 10 basis points and WTI crude is up 40 basis points. So what does that all mean for the S&P 500? It means new all-time closing highs. Same thing for the Dow as well. Dow Jones Industrial Average, all-time high and a breakout if you look at the chart. So Dow looks interesting as well. For the S&P, though, support is in the 2,900 to 2,950 zone. That is unchanged. Resistance, we're kind of knocking on the door of resistance right now, 3,000. And as I've said all week, it's more of a psychological level than anything else. People tend to give importance to the round numbers, right? Or the hundreds or even the thousands, right? You really shouldn't. It's just another number on the chart, but that's how our minds work. That's how we're wired. So 3,000 is psychological resistance here in the near term. RSI did confirm the breakout, as we've said, and continues to hold in bullish ranges. Again, we've talked about this. We've harped on it all week. We've harped on it in the past. It's one of the most important indicators that I look at. I want to see RSI hold above 40 on any pullbacks while the S&P 500 is above 2,950. That tells us that momentum is with the trend to the upside and the path of least resistance is likely higher. Add to that some Chaikin money flow, which is still neutral, but ticked back up to the positive side, which is a step in the right direction for this indicator. We've been talking about it all week. What have we been saying? We've been saying we've been dancing with the zero line. Well, now we've got a little bit of a pop here with that rally yesterday. See if we can get Chaikin money flow to get into gear with the RSI and confirm the uptrend in prices, and that would just be another data point to increase the odds of a continuation of the uptrend for the S&P 500. But right now, staying the course remains the best strategy. What does that mean? Look for your leading stocks in the leading industry groups and buy those stocks when they're oversold with bullish money flow. Remember that checklist we showed you yesterday? Use that checklist to your advantage. It gives you a lot of information to put the odds in your favor. Now, our market in a minute. What am I writing about in my note today to Chaikin Analytics clients? Record closing highs for the Dow and S&P. We hit on that already. Yields rally, treasuries fall on stronger economic data. We did get some CPI data, which came in stronger than expected. And we also had the lowest level of initial jobless claims since mid-April. So two stronger than expected economic data points sent yields higher on the day, sent treasuries lower. Relative trend for semiconductors shifts to neutral. And for those of you who are longtime listeners of my show, and for those of you who read my notes week in and week out, you know the importance I place on semiconductors. And the fact that that semiconductor relative trend, relative keyword, is shifting to neutral from bearish, that has positive implications for the overall market. Now on Fridays, I look at a lot of key themes in my note. Large over small, growth over value remain two of the key themes that we are highlighting. Futures point to a higher open today, as I said. Let's dive into the power bars now. Power bars for the major indexes all strengthened over the course of the past week. Dow 7-3, bulls to bears, 83 basis points to the good. S&P 500 tacked on 25 basis points yesterday, 141 bulls, 68 bears. NASDAQ was a slight was an underperformer, not slight, was an underperformer. 34 bulls to 11 bears, and small caps just continue to underperform the market. 552 bulls, 311 bears. Bonds down, ticks sending yields higher according to the Chaikin Power Bar. Large cap stocks and small cap stocks are bullish. Let's hit our stock of the day now. And for those of you who follow along with our process, for those of you who use Chaikin Analytics and you look at the industry groups and how they're performing, you will know that home builders have been a strong group. Over the course of the past few months, at various times, we've suggested home builders as a bullish idea. So our bullish stock of the day today is Pulte Group. PHM is the ticker symbol. Closed at 32.69, up 12 basis points yesterday. Has a very bullish Chaikin Power Gauge rating. Why? Attractive financial metrics, very strong earnings performance, and strong price volume activity. And when we take the 20 factors, 5 in each of these 4 categories, we come out with a very bullish rating, very bullish stock, strong trend, strong industry group, outperforming the market, dynamic duo and gear, market and model are in agreement, persistently bullish money flow above a rising long-term trend line. See how we're going through and checking the boxes, checking the boxes, checking the boxes? Well, now you can actually get a checklist at Chaikin Analytics to go through the items that we talk about every day. And really the only knock on Pulte here is, you should be able to see it, is that it's overbought. But now you can see that visually, right? Power gauge is bullish, outperforming the market in a strong industry group. Check, check, check. Above the rising long-term trend line, check. Strong money flow persistency, check. Pulte, type of name we want to own when it becomes oversold. Right now it's overbought. We don't want to chase it. I would also highlight the fact that the market is overbought. So I don't want to chase overbought stocks in an overbought market. I think your odds of success greatly improve if you get these stocks when they are oversold, especially if they're oversold with bullish money flow. But put Pulte on your bullish watch list. It should have been there already. Sector tracker now, moving to the major sectors over the last 5 days. Energy has had a bit of a rebound here with oil up nearly 2% over the past 5 days. Comms doing well. A lot of the internet names starting to perk up. We'll take a look at the FANGs a little bit later in this show. Discretionary, hard to get excited about discretionary. There are parts of discretionary that are doing well, but a lot of the strength in discretionary has been a function of Amazon. Remember, if you look at the XLY, the discretionary ETF, Amazon's about 24%, and Amazon's been on a tear, so that's really helped the discretionary group. Tech, utilities, and fins are middle of the road, as are staples. REITs coming under pressure here with yields rising. Healthcare, remember we talked about healthcare on Tuesday, and we said that the relative trend looked like it was starting to reverse and head lower again. Healthcare underperformer. Industrials down 1%. I have not been a fan of industrials. We've been writing about it week in and week out. We wrote about it this past Tuesday and said industrials look like they have more to go to the downside on a relative basis. That is playing out. The one that I've wanted to like, I'm starting to warm to, and it's making it hard, is materials. Down at the bottom of the list now for a 3rd day in a row. We've started to see some relative improvement in materials. I might be a little bit early here, but we're going to keep it out. We're not going to be dogmatic, but I'm starting to warm to materials right now. Our industry in focus today, oil and gas equipment and services. Over the past 6 months, group has underperformed by 24%, and we have been uber bears on this sector and on the industry groups within the energy sector. Power bar ratio, which measures future potential, is very weak. 17 bearish or very bearish stocks for only 2, count them, 2 bullish or very bullish stocks. Services, oil and gas equipment and services, is currently ranked number 21 of the 21 subsectors that we look at. It is the worst of the worst. Some of the indicative names there with very bearish Chaikin Power Gauge ratings: RPC Inc., ticker symbol is RES. Apergy, ticker symbol APY. And New Park Resources, ticker symbol NR. And what I will say is these are mostly all oversold right now, so they don't set up well for bearish trades. But let's look at the group. Here it is. Here's your XES. Now, it does have a neutral minus Chaikin Power Gauge reading. So what does that mean? It means that the rating would be bearish, except for the fact that we've perked up above the trend line. So we give it, we acknowledge the fact that the technicals are important, and we realize that that could be the sign of a shift, so we want to get there. But for all intents and purposes, this has been a massive underperformer, continues to be a massive underperformer, persistently bearish money flow throughout the past 12 months, although slightly perking up here. We'll see. Give it a little bit of time, but it's just been indicative of the type of name and the area of the market that you want to avoid. Remember, we talk about the process of buying strong stocks and strong industry groups. well, this is a weak industry group, and we look for opportunities to short these stocks or take bearish positions, or at the very least, just avoid them. Potential early signs of a shift, but I'm not convinced just yet. Continue to avoid energy. Taking a look at what's trending now. Yesterday's S&P 500 gainers, losers, movers, shakers. The gainer side of the board all has one thing in common. The White House is withdrawing their proposal to eliminate rebates on government drug plans. That was a positive data point and positive catalyst for the insurers, and as well as CVS, who sells the drugs, right? So Cigna, Anthem, UNH, CVS, and Humana all moving higher on that news. Nothing company specific. It was more of an industry specific dynamic. So that's what's driving strength there. IRM, Iron Mountain, down 7.5% on a downgrade. Drug stocks, same thing, regulatory focus, right? President Trump has been pretty vocal on targeting drug pricing. That put pressure on Merck and Eli Lilly yesterday. Merck down 4.5%, Lilly down a little over 4%. XEC catches a downgrade to send that stock lower by 3.8%. Nectar, didn't see any real news there to drive downside in that stock, down over 3.5%. Here it is, folks. This is the chart that I watch religiously. Semis relative to the market, SMH relative to the SPY. When this chart is moving, when this line is moving up, that's bullish for the market. When it starts to tick down, that's bearish for the market overall. There's a high correlation between this relative relationship and the overall equity market. Now, what we have here is during that pullback in May, we found support, tested it again, and now we're moving higher above the 200-day moving average. But what gets me excited is this shift in RSI. This is the RSI of the ratio. RSI, the momentum of the ratio of semis to the overall market, and it is moving higher. It's making that shift from bearish ranges to bullish ranges. Became oversold. Then we had a positive divergence here on this retest, and now we're moving higher. And notice what happened here. This pullback didn't get below 50 on the RSI. That is a positive sign for the market in general. On an absolute basis, semis held support and are now working higher. To the extent that semiconductors are outperforming the S&P 500, that is bullish for equities. This trend had been bearish for me for a while. I moved it to neutral today. That's exciting for longs. Another theme that we like, large over small. It remains the play. Here we're looking at IWM relative to the S&P 500. So small caps relative to the broader market, small caps relative to large caps. That is a clear downtrend, folks. It is a clear and ugly downtrend, and it's been in place for a year. Tried to rally, tried to set a support level, broke through it, continue to head lower. At the same time, the move is being confirmed by momentum as the RSI is in bearish ranges. Now, we do have a slight positive divergence here. It's worth paying attention to, but we await confirmation on that front. We continue to like large caps over small caps for equity exposure. So what does that mean? If you're looking at a stock, right, and it meets your criteria, checks the boxes on the Chaikin checklist, and you're trying to choose between two, choose the one that's a large cap over the one that's a small cap. That's what that means here, folks. At the same time, same analysis, choose the one that's growth over value. Here's growth, Russell 3 growth over Russell 3 value. Clear uptrend, goes into a consolidation. RSI firmly in bullish ranges. Likely this consolidation likely resolves to the upside, in my opinion. So when you're, again, when you're thinking about your positioning, and if you have a choice between two stocks that both check all of the boxes on the checklist, favor the one that's a growth name over a value name, and favor the one that's a large cap over a small cap. And that setup tells me that this chart is likely going to break to the upside. This is the FANG. It's an index that I built for Facebook, Amazon, Apple, Netflix, and Google. And you can see we've been in a consolidation for about a year. And we're knocking on the door. We're close to a breakout. On a relative basis, we've been on a consolidation as well. But what's interesting to me is this rally has pushed RSI higher. Growth over value, large over small, FANG stocks could break out. That's going to wrap it up for today, everybody. Head over to chaikinanalytics.com/survival guide to sign up for my note.